Hello, this is Andrew Westhof with Homes Mortgage Lending, coming to you today with 4 credit tips to help you when you're purchasing your first home. Homes Mortgage Lending is a great mortgage brokerage in the state of Michigan with fantastic interest rates and great service and closing times. So if you are in the market to purchase a home in the state of Michigan, please contact me. All of my contact information is in the video description. So first tip, when you're purchasing a home, one of the easiest ways to increase your credit score is going to be to have optimal utilization on your revolving debt. So what does that jargon mean? It means having your balance on your credit cards be at a low point as opposed to your credit limits. The most optimal score is somewhere between, or the most optimal range is somewhere between 6 to 10% of the credit limit is where you want your balances to be when we pull credit. But really anything under 30% is going to be very near optimal. So the way that it works is whatever your credit balance is, every month, the credit card company, whoever your credit card is through, is going to send the balance to the credit bureaus on a given day. So it's a snapshot. It's not necessarily the day you make your payment, it's just a random day in the month. So when they send that payment, even if you're paying off your credit card every single month, say your balance is $900 and your credit limit is $1,000, and you pay it off the next day. Well, the day they sent it, it was $900. So the credit bureaus input that as 90% credit utilization. And that's pretty bad. That's going to hurt your score for sure. So optimal, like I said, is 30% or lower. The way it works is that if you're at 50% or below the credit limit when they send that to the bureaus, it's going to help your score. 50% or higher than 50% is going to start to hurt your score. And when you get close to being maxed out, 80, 90, 95, 99% of the credit limit is being used, that's when it's going to really start to ding your score. So you don't know when the credit card companies are going to send that information to the bureaus. You can call them and find out and try to have your card paid prior to them sending it. But just to make things easy, what I always suggest to my clients is a month and a half to 2 months before your credit is pulled, just get your card paid down to 30% of the credit limit or lower and keep it at that level. Now, one added piece of advice is don't just pay the card off and leave it paid off for a few months before the credit's pulled, because if it shows a $0 balance and zero payment, it's going to show as an open card, but it's going to show as an inactive card, which isn't going to give you as much of a effect on your credit, the positive credit from your payments. So on to tip number 2. So tip number 2 is to go to a website before a mortgage lender pulls your credit called Opt-Out Pre-Screen and opt out of solicitations from other credit lenders. So what happens when you get your credit pulled is there's these things, the credit bureaus themselves will sell your information to companies through what's called credit trigger leads. And what that is basically any mortgage company, they have to get approved, but it's pretty easy to get approved. They can buy information for anyone who has had their credit pulled based on areas, based on their score, based on really much of anything. So most clients, if they have their credit pulled, as long as the credit bureaus have their phone number and or email address, they're going to get bombarded with calls and emails. What I do when I pull your credit is I remove your phone number and email from my credit pull. But if the credit bureaus already have that information from a previous credit pull, which most of the time they do, you're still going to get bombarded. So there's a lot of debate in my industry of whether or not it's ethical or should be legal. Hopefully in the future, it's not something that happens, but currently it's something that happens, and it happens pretty regularly. Many of my clients get 20 to 40 calls, texts, or emails within the first couple days of having me pull their credit. So it's really annoying. So you want to go to Opt-Out Pre-Screen, and you can opt out online for 5 years. And you want to do that at least like 10 days before your credit is pulled, and you shouldn't get any of those solicitations. You can actually send something in the mail. There's a form right on that website where you can opt out for life. This will also help you for when you have your credit pulled for auto loans or personal loans, because the same thing happens in those industries as well. All right, so tip number 3 is that when you're going to get your credit pulled from a mortgage lender, if you're thinking you're going to be shopping between a few different mortgage lenders, it's a good idea to have any mortgage lenders you're thinking about working with pull your credit at the pre-approval stage. The reason for that is when a mortgage lender pulls your credit, it does have a credit inquiry hit to your score. You get a ding for having the credit pulled. It's 5 points or less, so it's not a huge deal in most cases, but you don't want to have your score continually dinged for multiple credit inquiries. And other credit lenders are going to need to pull your credit to give you accurate pricing. So if you have your credit pulled by the first mortgage lender, you get that 5 point ding. You have to get a credit pulled to get pre-approved, so it kind of is what it is. But after that first pull, any other mortgage lenders that pull your credit within 30 days, you're not going to have a inquiry hit. So your score is not going to drop any further because of other mortgage credit pulls. So a good time to shop around and get other quotes. Now I say shop around, meaning a good time to have other mortgage lenders pull your credit. It's actually a bad time to actually shop for what lender you're going to use based on rate, because rates and the fees change every day for every lender. It's just the market, and mortgage rates are kind of like gas prices. Different lenders will change their margins at different points. So you don't really know who's going to give you the best deal until your offer is accepted and you can lock that rate in. But when you're pre-approved with multiple lenders, you're working with multiple lenders as you're searching for the home, you're going to get a feel for who you like working with and who you don't. So it'll help you make that decision more easily once your offer is accepted. And then tip number 4 is that you should be, especially if you have any concerns about your credit, is it's a good idea to look at where your credit's at sooner rather than later. And I don't mean yourself on like a consumer credit report such as like Credit Karma. I mean to actually have a mortgage lender take a look at it. So many mortgage lenders, myself included, we can do a soft credit pull that doesn't hurt your score. And mine's really cool, and a lot of other ones have the same thing, but it's really cool. We can look at the exact same credit report as the hard credit pull with it actually not affecting your score. So the reason we have to do a hard credit pull is because it's coded a certain way, so we can run it through automated underwriting systems from Fannie Mae, Freddie Mac, whatever loan you're going through. So we actually have to do the hard credit pull to get your loan in process, but we can do a soft pull to see where the score is at and get the gist of the information and look and see if there's any issues. Most mortgage lenders, myself included, we're not credit experts. So if there's some major issues on the score, I'm going to refer you to a company to get professional help, or you can certainly work on it on your own. But if there's some more involved things, then knowing what they are is going to help you. Now, I've had many clients in the past where I've pulled their credit, and there was a late on a some account from a while back that they had no idea about. They didn't know it was reported late. They have no idea why, and knowing that, they obviously want to fight it. But I already, we're looking to buy a home the next week, so the score kind of is the score. It's going to take too long to fix it. So the sooner you know, the more chance you have to fix things like that, and then just getting some advice in general. Homes mortgage lending, what I do, we have what's called a mortgage consultation, where we can actually do the full pre-approval minus the hard credit pull. We do the soft pull, so we can see everything where you're at as far as your income, your assets, run some numbers so you know what you need to save up for if you're saving for the down payment, make sure the price range and the homes you're looking for are going to match up with your budget. So we can do kind of the whole thing up front and uncover any issues or and game plan to be in the best position possible once you're starting to look for a home. So I actually love it when I talk to clients 6 months, even further out than that, before they're looking to start the home search, because we can get a really good idea of where they're at. If they're in great shape, we just say, hey, okay, keep it up, continue saving money, continue making your payments on time, and you're going to be good to go. If there's some issues, then we've got some time to fix them. And mortgage lenders, we aren't ever going to care what's going on. We just want to be able to help you get a home. So any mortgage lender that's snippy at all about any issues that you have, you probably want to find a different mortgage lender to work with that's a bit more friendly. But we certainly want to help you get in the best position possible. So I hope this was helpful. Again, I'm going to put my contact information in the video description. If you are in Michigan and want to go through that mortgage consultation, I'd be happy to help you with that. Or if you're looking to purchase a home and want to get the pre-approval started, I'm happy to help you with that as well. And then if you have any questions, please post them in the video comments. If this was helpful, please like the video, subscribe if you want to see similar content. I also do some mortgage rate updates about every couple weeks. So hope to see you on the next video. Thank you so much. Have a great day.